Hey everyone, welcome back to another episode of 4 Quarters and a 10K. I'm your host Joseph Abraham, and today we're taking a closer look at a company that's been making waves across both government and commercial sectors, Palantir Technologies. Here in this podcast, we aim to take some of those super complicated topics that are really important to you, the amateur investor, and break them down into bite-sized pieces, so you can make informed decisions about your portfolio. Today, we're tackling a company that I think is really interesting, and that's Palantir Technologies. You've likely heard of them. They're often described as kind of a mysterious company. What is it exactly that they do? And who are they working with? Well, they are a publicly traded American company, which simply means their shares are bought and sold on stock exchanges like the New York Stock Exchange. So yes, you can invest in them. They specialize in creating software platforms that can analyze really big data. We're talking massive amounts of information, and they help organizations make sense of it all. Think of them as helping companies find the important needles in gigantic haystacks of data. The company itself was founded back in 2003 by a group of pretty big names in the tech world: Peter Thiel, Stephen Cohen, Joe Lonsdale, and Alex Karp. Impressive lineup, right? And Alex Karp is actually still the CEO. They're headquartered in Denver, Colorado. So, when Palantir first started out, what was their main mission? Well, their initial focus was actually quite specific. They wanted to help combat terrorism. But, and here's the really important part, they wanted to do it in a way that also protected civil liberties, meaning basic rights and freedoms. Wow, that's a tough needle to thread, a difficult balance to strike, but that was their mission from the start. Fascinating. Initially, they were heavily focused on government clients. Think intelligence agencies, defense departments, high-stakes stuff. But as the years went by, their vision really expanded. They started to see the potential of their data analytics expertise to solve all sorts of complex problems for both public and private sector organizations. So, not just government anymore. They began to branch out and develop these really powerful software platforms like Palantir Gotham, Palantir Foundry, and Palantir Apollo. Those are some pretty distinct names. So what do those platforms actually do? That's a great question, and it's what we're going to unpack today. We want to make sure you understand what each of these platforms does, how Palantir makes money from them, and most importantly, why you, as an investor, might care about this company. So let's get into it. First, let's talk about how Palantir is structured as a business. They've got two main divisions, government and commercial, which means regular businesses. So they're serving both sides. For a long time, the government side was the bigger revenue generator, which makes sense, right? Given their initial focus on defense and intelligence agencies. But in recent years, we've seen a really interesting shift. Their commercial segment is growing super fast. They're expanding beyond government contracts. And this diversification, meaning not relying on just one type of customer, well, it's a really good sign for the company's long-term growth and stability. It's never good to put all your eggs in one basket, after all. So, what does that look like in terms of actual revenue? Well, in 2024, their government revenue was $1.6 billion, representing about 55% of their total income. And their commercial segment brought in $1.3 billion, accounting for the remaining 45%. So, pretty close, actually. Almost neck and neck at this point. How does that compare to previous years? Well, if you look back to 2019, their total revenue was only around $700 million. By 2024, it had jumped to $2.9 billion. Wow! That's like... it almost quadrupled. It is a huge increase, and it shows that they've been growing really consistently and significantly. That's definitely a positive sign for investors, seeing strong, steady growth over time. I think it's a testament to their strategy of diversifying their revenue streams. Because initially, they were heavily reliant on government spending, which, as we know, can be a bit unpredictable. It can fluctuate, depending on political priorities and budget cycles. But by expanding into the commercial market, they've created a more balanced and sustainable revenue profile. That's smart. And the numbers really show that this pivot is paying off. Their commercial segment is growing at a much faster rate than their government segment, which indicates that they're successfully tapping into new markets and finding new business customers. So they're clearly doing something right. And it's not just about who they're selling to, it's also about how they're structuring their deals. Let's talk about their pricing model. Palantir's pricing model is actually quite different from your typical software company. They don't just sell standard software licenses like you might buy for Microsoft Word. Instead, they offer these really highly customized, comprehensive solutions designed to tackle complex problems. Problems that can cost organizations millions or even billions of dollars. These are big problems. Palantir emphasizes building these deep strategic partnerships with their clients. It's not just a transactional relationship, like buying a coffee. It's more of a long-term collaborative effort to solve major issues together. So how does that translate into how they actually make money? Their revenue primarily comes from three sources: software licensing fees, paying to use the software; professional services, charging for help setting up the software, training, and consulting. Basically, expert assistance. Long-term contracts, agreements often lasting years, especially with government agencies, that provide a really stable, predictable flow of income. Now, for their commercial clients, we're seeing a growing trend towards subscription-based pricing models. Think like Netflix, paying a regular fee for access. Subscription models are good for companies because they create that predictable, recurring revenue, which investors generally like to see. So what do these contracts actually cost? Is it per user? Well, not really. It's not typically based on a simple per-user basis. Their pricing is really tailored to each individual client, very customized, and it reflects the complexity of the problems they're solving. We're talking big, enterprise-level clients, large corporations and government bodies, with sophisticated needs. On average, their contract values can reach into the millions of dollars. In fact, in the fourth quarter of 2023, their average contract value was around $7.7 million. $7.7 million. That's a lot of money for one deal. And I imagine some of those government contracts are even bigger. Some can exceed $20 million annually. They also have these tiered pricing structures for their Foundry and Gotham platforms, where the cost can vary depending on a few factors. The volume of data, a client's processing, more data, more complexity, higher price. Makes sense. The number of users who need access, and the complexity of integrating the platform with the client's existing computer systems, fitting it into what they already have. So it's really tailored, a very bespoke or custom-made approach. It sounds like their pricing structure is pretty complex, but it reflects the value that they're delivering. We're talking about really advanced capabilities, especially with their increasing use of artificial intelligence, AI. They're not just selling software, they're selling solutions, and that commands a premium price. And speaking of AI, they're also doing some really interesting things with dynamic pricing, particularly in the retail sector. They're using their platforms to help clients adjust their prices in real time, based on all sorts of factors like supply and demand, competitor pricing, even things like weather patterns. They can help retailers optimize their pricing to maximize revenue. We've even seen examples where this has saved companies millions of dollars. There was a global beverage manufacturer that reportedly saved $5.4 million just by using Palantir's dynamic pricing capabilities. Wow, that's impressive. A real bottom-line impact that investors love to see. Okay, so we talked about their pricing model. What about the length of their contracts? Those long-term government contracts are particularly important because they provide a very stable and predictable revenue stream. That's very good for the company's financial health. Typically, they span 3 to 5 years. That's a significant commitment from those government agencies, showing a lot of trust in Palantir's capabilities. It also reduces the company's reliance on constantly having to win new business, allowing them to focus on delivering on existing contracts. How much revenue are we talking about with these contracts? Well, looking beyond just government, in the fourth quarter of 2024, they achieved a record-setting $803 million in U.S. commercial total contract value, TCV. $803 million. Now, TCV basically means the total value of all the contracts signed during that period, even if the money comes in over several years. That's a huge number, and it was a 134% increase from the same period in the previous year. That's incredible growth, and a really strong indicator of the growing demand for Palantir's solutions in the commercial sector. It seems like they're really gaining traction there. And it's not just U.S. commercial TCV. Their overall TCV grew by 56% in the same period. So their business is expanding across the board. Okay. So we've got a good understanding of who Palantir sells to and how they generate revenue. Now let's dive into their core products, starting with Palantir Gotham. Gotham is their flagship product, primarily designed for government agencies, intelligence agencies, defense departments, law enforcement, high-stakes stuff. So what does it actually do? Imagine it as a highly secure central nervous system for these organizations. It allows them to share data in real time across different departments and agencies, breaking down those silos. Think of silos like separate containers, where information gets trapped and isn't shared easily. Gotham breaks those down. It provides sophisticated analytics to help them identify patterns and connections in those huge data sets they're dealing with. It's all about connecting the dots and making sense of all that information. Some key features of Gotham include specialized collaboration tools for teams to work together securely, geospatial analysis, basically tools for mapping, tracking, and analyzing location-based information visually, predictive capabilities, using data to help anticipate future events or trends, trying to figure out what might happen next based on patterns, sophisticated alert systems to flag critical information as it emerges, like a real-time early warning system. The primary users are intelligence analysts, military personnel, and law enforcement agencies, people dealing with really high-stakes decisions. Some real-world examples of how Gotham is used include defending against sophisticated cyber attacks, analyzing disinformation campaigns, optimizing the allocation of critical resources like where to send emergency responders, and even tracking complex financial budgets. It's got a pretty wide range of applications, all about helping these organizations make better decisions faster. Time is of the essence in those situations. Gotham is designed to integrate both historical data and real-time streaming information, so they can see the big picture and also what's happening right now. It sounds like a really powerful tool. And given the sensitive nature of their clients, I imagine there are significant barriers to entry for potential competitors. Barriers to entry just means things that make it difficult for new companies to enter a market and compete. Here, we're talking about needing stringent security clearances, the ability to handle highly classified data. Not just anyone can do that. And the mission-critical nature of Gotham's applications, where lives can literally be on the line. All these factors create a level of trust and expertise that's difficult for new companies to replicate, giving Palantir a strong competitive advantage, meaning an edge over their rivals in this sector. Okay, let's move on to Palantir Foundry. This one, as mentioned, is used by both commercial and government clients. How does it differ from Gotham? Well, Foundry is a more versatile platform, meaning it can be adapted for many different uses. It's focused on data integration, bringing data together from lots of different places, management, and advanced analytics for a broader range of clients across various industries, not just those high-security government applications. Its core function is to bring together data from all sorts of different sources, different databases, spreadsheets, applications, basically any data a company has, regardless of where it's stored or its original format. It's like a universal translator for data. How does it do that? It uses what they call an ontology-driven architecture. Okay, that sounds complicated, but think of it this way. They create a kind of shared dictionary or a map for all the data within an organization. This ontology defines how different pieces of information relate to each other, creating a common understanding. It's like creating a Rosetta Stone for their data. So the platform understands what the data means and how it connects, no matter where it came from. This is powerful because it allows Palantir's platforms to analyze data much more effectively by seeing the hidden connections between different data sets. What else can Foundry do? In addition to data integration, it offers powerful data transformation capabilities, allowing users to clean, prepare, and organize data for analysis. Basically, getting it ready to be useful. It has workflow automation features, making repetitive computer tasks run automatically to save time and improve efficiency. And it seamlessly integrates with artificial intelligence, AI, and machine learning, ML, models. AI and ML are becoming increasingly important, right? And this integration allows Foundry to uncover even deeper, more insightful patterns, like giving the platform a brain. It also has real-time collaboration features, so different teams can work together on the same unified dataset. No more emailing spreadsheets back and forth. Phew. Who typically uses Foundry? It targets a wide range of users, from data scientists building complex models to business analysts understanding market trends and operational teams focused on improving efficiency. It's a pretty versatile platform. Some specific examples of how Foundry is applied include supply chain optimization, helping manage inventory and understand disruptions, really important these days. Advanced fraud detection in financial services, accelerating drug development in healthcare by integrating vast research data, speeding up bringing new drugs to market. That's amazing. Optimizing revenue growth management for consumer goods companies. Risk analysis across various sectors. Improving manufacturing processes. Optimizing pricing strategies in dynamic markets. It's a pretty diverse set of applications, and one of the reasons Palantir is seeing so much growth in the commercial sector. It seems like they've found a real sweet spot there, solving problems for many different types of businesses. Okay, Gotham and Foundry covered. Now let's move on to Palantir Apollo. That sounds pretty futuristic, right? But it's actually the foundation that underpins everything else Palantir does. Apollo is essentially the operating system Palantir uses internally for their software delivery and update process, kind of the brains of their own operation. It allows them to continuously and securely deliver new software features, updates, and security patches to their clients across all sorts of different technology environments, whether a client is using the cloud, servers owned by companies like Amazon or Google, on-premise servers, servers the client owns themselves, or even edge computing, processing data closer to where it's generated, like on a factory floor. Apollo can handle it all, very adaptable. Why is that so important for Palantir and its clients? It ensures clients are always running the latest, most secure versions of Palantir software without major disruptions, like a seamless automatic update process for very complex systems. Key functions include continuous integration and continuous delivery, CI/CD. These are fancy tech terms for practices that allow developers to release software updates frequently and automatically. This means faster innovation and more reliable software. Apollo handles the automated deployment, plus comprehensive monitoring and management to ensure everything's working properly and securely. It's like the engine keeping everything running smoothly behind the scenes. It's primarily used by Palantir's own software developers and IT operations teams, so it's not something clients directly interact with. But it's crucial for ensuring everything works as expected. And for investors, this is important. A robust system like Apollo shows Palantir can rapidly innovate and adapt to evolving client needs, which is key to staying competitive in the fast-paced tech world. So we've covered Gotham, Foundry, and Apollo. Now let's move on to the Palantir Artificial Intelligence Platform, or AIP. This sounds like it's at the cutting edge. It is their newest platform, designed to integrate with companies' existing systems and supercharge their decision-making capabilities. How? By leveraging the power of AI, of course. Its core functionality involves breaking down those data silos again, those isolated pockets of data within an organization, like sales data being separate from marketing data, preventing a full picture. AIP creates comprehensive, interconnected models of how a business actually functions, giving them a holistic, AI-powered view of their entire operation. That's impressive. Then it empowers users across different departments to explore various what-if scenarios, predict potential outcomes, and ultimately make more informed, strategic decisions using AI. What kind of AI? They're using large language models, LLMs. This is the same kind of powerful AI technology powering tools you might have heard of, like ChatGPT. Palantir is using LLMs here to help the system understand complex business situations and allow users to interact with data more naturally, kind of like having a super intelligent assistant to help make better decisions. And it's designed to be user-friendly, so it can be used by a wide range of people, not just data scientists, but military commanders, logistics departments, business users, anyone needing to make complex decisions based on data. Some concrete examples of AIP use: in defense, predicting enemy troop movements, or optimizing resource allocation in complex battlefield scenarios. Pretty high stakes. In commercial, optimizing warehouse operations for e-commerce, enhancing industrial efficiency, implementing dynamic pricing in retail, and significantly improving manufacturing processes. AIP has been a major driver of Palantir's recent growth, especially in the U.S. commercial sector, as businesses see the real impact of AI-powered insights on their bottom line, meaning how it helps them make or save money. Okay, those are the four main platforms, but I know they also offer a range of services. They provide consulting and implementation services. Basically, expert help to get clients set up and using the platforms effectively. They're not just giving them the software and saying, "Good luck." They're working closely with them. They also offer ongoing technical support and often embed specialized teams directly within client organizations, meaning Palantir employees work at the client's site, very hands-on, to ensure platforms perform optimally and clients realize the full potential. That's good, because these platforms are complex. They also offer data integration and migration services, help moving a client's existing data onto Palantir's platforms securely and smoothly, making adoption easier. And what about that bootcamp program mentioned earlier? This is an interesting program designed to give potential customers hands-on experience with the AIP platform. Like a proof of concept or a test drive before committing it, it allows them to work with Palantir's experts to identify specific use cases in their own organizations where AIP can deliver tangible value, real measurable benefits like cost savings or efficiency gains. It's mainly targeted at commercial clients who might be less familiar with Palantir, and it's been really effective in acquiring new clients because they see the value firsthand, solving concrete problems, not just looking at abstract presentations. Seeing is believing. So Palantir has these incredibly powerful platforms and supporting services. But where exactly do they operate globally? They've established a pretty significant global footprint, with operations in North America, Europe, the Asia-Pacific region, and the Middle East. They're pretty much everywhere, a global company. Key markets include the US, where they've seen strong recent growth. Remember those record US commercial TCV numbers, the UK, and various other international markets. With headquarters in Denver and major offices globally, they're well positioned to serve a global client base. Now let's talk customers. We know they started focused on government, but who are their key clients today? Their client base is quite diverse, encompassing both public and private sectors. On the government side, intelligence agencies, defense departments, civil agencies like the CDC, Centers for Disease Control and Prevention, the NIH, National Institutes of Health, and even international organizations like the UN World Food Program. Some really big names. On the commercial side, an equally broad base spanning industries like financial services, healthcare, manufacturing, aerospace, automotive, consumer goods, energy, telecom, retail, insurance, transportation, utilities, pretty much every major industry. Big name clients include Airbus, BP, Merck, Ferrari, General Mills, Sompo Japan, and United Airlines. That's an impressive list, showing their diversification and the broad applicability of their platforms. They've really made a successful push into the commercial market. All right, now let's shift gears and do a financial deep dive. I've been looking through their annual report, the 10K for 2024, and some quarterly updates, the 10Qs. Now, for us amateur investors, these documents can seem intimidating. The 10K is like the company's detailed annual report card, filed once a year. The 10Qs are shorter, quarterly updates. We want to break these down, make them clear, insightful, and focus on what matters most to understand the trends and where things might be headed. These documents are a window into how Palantir is really doing financially. We'll look at year-over-year comparisons and explain the financial lingo as we go. So, first things first, big picture. How healthy is Palantir overall? The revenue growth in the 10K really stands out. A 29% increase, bringing total revenue to $2.87 billion for 2024. That's strong growth. But here's where it gets really interesting. That growth actually accelerated in the fourth quarter of 2024, hitting a strong 36% year over year. Why does acceleration matter? It tells me they're not just growing, they're gaining speed and momentum, which investors love to see. On top of that, the U.S. market seems to be a huge factor, with U.S. revenue growing 38% for the whole year. What's my take? That acceleration late in the year suggests they're really hitting their stride, and that outperformance in the U.S. market suggests they've found great product market fit here, meaning their products are perfectly meeting the needs of American businesses right now. Are their U.S. strategies just super effective? Or are certain U.S. industries finding a greater need? Maybe there's something about their U.S. approach they could apply internationally. Something to think about. And it's not just money coming in. How many new customers are they getting? The 10K mentions a 43% jump year over year in customer count just in Q4 2024, bringing them to 711 total customers. That's a pretty good sign. Customer growth backs up the revenue growth. It shows more organizations see the value in what Palantir offers. Growing revenue from existing customers is great, but bringing in a ton of new customers shows they're successfully winning new business too, and their platforms are resonating in the market. Now, the March 2024 10Q mentions something called remaining deal value, RDV, at the end of 2023. The number was $3.9 billion, with $2.1 billion from commercial and $1.8 billion from government. What exactly does RDV tell us? Okay, think of it like this. It's the total value of contracts Palantir has already signed, but for work they haven't fully delivered yet. So it hasn't all been officially counted as revenue. It's basically a backlog of future income they expect to receive, almost $4 billion worth. That's a strong sign of potential future growth in both segments and gives us a hint about where they expect revenue to come from. It's like a glimpse into locked-in future earnings. Speaking of good news, the Q3 2024 earnings call transcript mentions something big. Palantir hit GAAP operating income and net income every single quarter in 2024. Now, for people following the company, this is a turning point. GAAP stands for Generally Accepted Accounting Principles. It's the standard official rulebook for how companies have to report their finances in the U.S. For a company like Palantir, known for fast growth, but historically not always profitable according to these strict GAAP rules. Hitting consistent GAAP profitability is huge. It suggests their business model is maturing, becoming more sustainable. It's not just about growing sales anymore, it's about managing costs effectively and making real, recognized profits. Big milestone. So overall financial health seems good. Now let's break down the segments, commercial and government. The September 2024 10Q confirms that for the 9 months ending then, 55% of revenue was government, 45% commercial. Historically known for government work, it's interesting to see commercial almost catching up. It reinforces that story of expansion and diversification, spreading risk across different customer types. Within commercial, the U.S. market seems to be on fire. They've talked about tremendous results and unprecedented demand in earnings calls. Strong words. The numbers back it up. Q1 2024 saw 69% growth in U.S. commercial revenue. Q2, taking out specific large deals, was 70% growth, 55% overall. Q4 2024 also showed 55% growth. Serious momentum there. That kind of sustained high growth in a competitive market says they have a product U.S. businesses really want. The talk of unprecedented demand shows a real hunger for their data analysis and AI tools. It's interesting they sometimes give numbers with and without strategic commercial contracts. These might be unusually large or unique deals. By showing growth without them, they want to demonstrate the strong underlying health of. And it wasn't just commercial. The Q1 2024 earnings call also mentioned a re-acceleration in their government business. So both key segments are contributing. For healthy, sustainable growth, you want both sides doing well. Renewed growth in their original core government business suggests relationships remain strong and demand from public sector agencies persists. Okay, now where's the money going? Spending. The 2024 10K shows sales and marketing, S&M expenses, up $142.8 million. That's 19%. Biggest reasons: stock-based compensation, we'll get to that, cloud hosting costs, paying for the server power to run their platforms, and salaries for the sales team. What do we make of this? Well, increased S&M spending makes sense if you're trying to expand. You need to invest in sales teams and marketing to reach new customers. Higher cloud hosting costs probably mean more clients are using their platforms more heavily, which is actually a good sign of adoption. As the saying goes, you gotta spend money to make money, especially when you're focused on capturing a growing market. R&D, research and development, also saw a big increase in 2024, up $103.3 million, 26%. Both the 10K and September 2024 10Q say, expect more increases here. Why is R&D important for a software company like Palantir? It's absolutely crucial. This is where innovation happens, developing new platforms like AIP, improving existing ones like Gotham and Foundry, exploring the latest in AI. More R&D investment is usually seen as a positive sign for long-term growth potential. It shows a commitment to staying ahead of the curve and creating more value for customers. Continued increases signal they have big plans for future innovation. General and administrative, G&A expenses went up too, by $69.2 million, 13%, in 2024. This category covers things like salaries for executives, finance, legal, HR teams, stock-based compensation again, and general office overhead. Is this just part of getting bigger? Mostly, yes. As a company grows, it needs more support staff to manage everything. Plus, the costs of being a publicly traded company, like compliance and reporting, add up. But again, notice stock-based comp is mentioned as a driver here too. And that brings us to stock-based compensation, SBC. It seems to have a big impact across their expenses. The 10K notes a $111.4 million increase in SBC just within the sales and marketing category for 2024. So, what exactly is SBC? It's a way companies reward employees using stock or stock options instead of just cash salaries. It's very common in the tech industry as a way to attract and keep talent people, aligning their interests with the company's success. Now here's the key part for investors. While SBC doesn't require the company to pay out cash immediately, it is counted as a real expense under those GAAP accounting rules we talked about, so it reduces reported profitability. It also increases the total number of company shares outstanding over time, which can potentially dilute the ownership stake of existing shareholders. The fact that SBC is driving up expenses in multiple areas, S&M, G&A, R&D, shows it's a significant part of how Palantir pays its people. It's something investors need to be aware of when looking at profitability and share structure. Let's switch to the balance sheet. Remember, the balance sheet is like a financial snapshot showing what a company owns, assets, and what it owes, liabilities, plus the owner's stake, equity, at a specific point in time. The 2024 10-K showed an increase in accounts receivable, AR. That's money owed to Palantir by its customers for services already delivered, from $364.8 million in 2023 to $575 million in 2024. They also mentioned a big chunk of this is owed by just one customer, identified only as Customer I. What does this mean? Well, increased AR could simply mean more sales, good, or it could signal potential trouble collecting payments, bad. And having one customer owe a very large amount creates concentration risk. If that single customer has financial problems and can't pay, it could significantly hurt Palantir's cash flow. Definitely something investors should keep an eye on. On a brighter note, the 10-K mentions interest income went up because they have more cash and short-term investments earning interest, especially with higher interest rates recently. Makes sense. A nice little extra income stream. Looking at the March 2024 10Q, we see deferred revenue, $237.2 million current, expected to be recognized as revenue within a year, $20.7 million. Non-current, longer term. What's deferred revenue? This is basically cash received from customers up front for services or subscriptions that Palantir has not yet delivered or earned. Because they haven't done the work yet, they can't count it as revenue under GAAP rules. Instead, it sits on the balance sheet as a liability, something they owe the customer, the service. However, it's generally a good indicator for investors because it represents future revenue that's already been booked. Healthy or growing deferred revenue suggests strong demand and provides some visibility into future financial performance. Moving beyond main financials, the September 2024 10Q mentions a share repurchase program, also known as stock buybacks. They bought back 1.8 million of their own shares for $45.6 million in Q3 2024, and they still had authorization to buy back about $954.4 million more in the future. What's the impact of buybacks? When a company buys its own stock, it reduces the number of shares floating around on the market. This can potentially boost earnings per share, EPS, which is simply the company's profit divided by the number of outstanding shares, a key metric investors watch closely. Fewer shares can mean higher EPS, all else being equal. Buybacks can also potentially support the stock price, less supply, same demand. Companies sometimes do this to return value to shareholders, especially if they think their stock is undervalued. But the flip side is that the cash used for buybacks isn't available for other things, like investing in R&D, making acquisitions, or paying down debt. It's a capital allocation choice. Okay, let's cover key strategic themes and risks mentioned in these reports. A recurring theme is their focus on enterprise AI, specifically productizing LLMs, turning that complex large language model tech into usable products for businesses via the AIP platform, and shifting from just building prototypes to deploying AI in real-world applications that deliver results. AI is clearly core to their strategy. They're aiming to make these powerful models practical and valuable for businesses at scale. That could be a key differentiator. The phrase prototype to production emphasizes their goal of making AI deliver tangible business value, not just cool experiments. Another clear theme: the strength of the U.S. market, especially the commercial side, which we saw reflected in those impressive growth numbers. Success here is a big part of their current story and plan. Doing well here shows they have strong technology and an effective customer approach in a major market. Huge demand. Government partnerships are still important, especially in defense, like Project Maven, an AI initiative for the U.S. military focused on improving image analysis and targeting, often mentioned in earnings calls. Why highlight these? They demonstrate Palantir's relevance to critical national security needs. Initiatives like Maven show the real-world impact of their technology. These contracts often represent large, stable, long-term revenue sources and position Palantir as a key provider for essential government functions. Of course, they face competition. The 10K mentions competition from larger companies, some of which have wider product ranges or more established relationships. What are the challenges? The tech industry is a fierce battlefield. Palantir is up against giants like Microsoft, Google, Amazon, Salesforce, and specialized consulting firms, many with significantly more resources, broader offerings, and potentially entrenched customer relationships. Competitors might bundle services, making it harder for Palantir to win deals. To succeed, Palantir needs to keep demonstrating superior technology, proving clear value for money, and focusing on areas where their specific capabilities truly shine. The 10K and Q2 2024 transcript talk about long sales cycles, especially with large companies and government agencies, and the use of pilot deployments or boot camps. Why are sales cycles long? Because adopting Palantir involves big decisions, significant investment, and navigating complex organizations or government bureaucracy. These are not simple, off-the-shelf solutions. That's where pilots and boot camps come in. They let potential customers try the platform before making a huge commitment, seeing how it works in their own environment with their own data. The 10K notes these initiatives are successful, suggesting it's an effective way to build trust, demonstrate the benefits, and make it easier for customers to sign those big contracts. The 10K, like all these official filings, also formally outlines potential risks. Cybersecurity threats are highlighted as high. Palantir deals with incredibly sensitive data for both government and commercial clients, making them a prime target. They state they're working hard to protect data, but it's an ongoing battle for any tech company. A breach could be devastating for their operations, reputation, and client trust. It's good that they acknowledge this risk and state they are focused on security. Intellectual property, IP, is another risk. This refers to the possibility of claims against them, e.g., being sued for allegedly infringing on another company's patents or technology, or others infringing on their technology. IP disputes are common in the software world. Defending against claims can be very expensive, and losing could potentially limit their ability to use certain technologies or result in hefty fines. Given their significant government work, risks related to government regulations, budget changes, and contract terminations are also mentioned. While government deals can be large and long-term, they are also susceptible to shifts in political priorities, government budget cuts, or policy changes that are outside Palantir's control. Importantly, government contracts often include clauses allowing the agency to terminate for convenience, meaning the government can sometimes cancel a contract even if Palantir hasn't done anything wrong, though usually with some compensation. Maintaining strong relationships with government clients and aligning with their priorities is crucial. Lastly, The 10K in March 2024. 10Q mentioned risks and regulations associated with overseas expansion. As Palantir grows internationally, they face new complexities, navigating different legal systems, regulatory environments like data privacy laws in Europe, diverse market conditions, and currency fluctuations. International growth represents a big opportunity, but it requires careful planning and execution. So looking ahead, based on management commentary and earnings calls, what are they expecting? Continued GAAP profitability is a big one, mentioned repeatedly in Q3, Q4 2024 calls. They're clearly hammering home this message to investors. After years focused primarily on growth, they're signaling a shift towards demonstrating consistent, officially recognized profits, a sign of business maturity and a focus on delivering sustainable returns. They also plan to keep investing heavily in growth, hiring more technical talent, and continuing to build out their product pipeline, which is reflected in that planned increased R&D spending we discussed. So even with the focus on profitability, they're signaling they're not slowing down on innovation. That balance is key, driving future growth while managing the bottom line. All right, so after this deep dive into Palantir's financials, what do we see? A company exhibiting strong revenue and customer growth, particularly impressive in the U.S. commercial market. They've hit that crucial milestone of sustained GAAP profitability. Huge for investor confidence. We looked at their significant investments in growth, sales and marketing, R&D, key aspects of their balance sheet like RDV and deferred revenue, the impact of SBC, and their clear strategic focus on enterprise AI. These documents, the 10Ks and 10Qs, are truly essential reading for anyone seriously considering an investment in Palantir. Remember, past performance doesn't guarantee future success, of course, but understanding these trends, numbers, and strategies paints a much clearer picture of where the company is today, where it might be heading, and the potential opportunities and risks along the way. Hopefully, this deep dive made those reports less intimidating and gave you, the amateur investor, a better grasp of the key financial aspects to consider. One final thought. Given Palantir's amazing growth in the U.S. commercial market, alongside their solid government business, what might their next big growth area be? Could international commercial markets catch up? Will new AI applications open entirely new doors? What market opportunities should investors be watching closely? It's definitely something to think about as you follow Palantir's ongoing journey. Thanks for joining me, Joseph Abraham, on this episode of 4 Quarters and a 10K today. If you enjoyed this show, then consider liking and subscribing my YouTube channel. We're always working to give you the knowledge and insights you need to navigate the world of investing.